The Senior Managing Director for Market Intelligence at Omnis Incorporated, James G. Rickards, has said that Wall Street loves a piñata party. It singles out a company or country, making it the piñata, then they grab their sticks and bang it until it breaks. Is this the game being played with Greece? To find out, I'm glad to say that Mr. Rickards joins us on the line now from New York. Good morning, Mr. Rickards. Thank you for joining us.
Thank you. Thank you for inviting me.
All right. Now, Mr. Rickards, is this the game being played with Greece? Is Greece a piñata?
Well, it is the game being played today, but this game has actually been played since last fall and possibly longer. So it's coming to a head. We see that the German parliament has, the lower house has voted to approve this Euro rescue package, really not just for Greece, but for all of Europe. But this goes back to last December when the Wall Street firms created products that are called credit default swaps. It's a little technical, but it's a kind of insurance, and basically you can bet that a country will default on its debts. So it's a little bit like betting that your neighbor's house is going to burn down, and then you have some incentive to go out and burn it down so you can collect on the insurance. That's what Wall Street banks have done with regard to sovereign debt in Europe. And so a lot of investors, speculators, hedge funds have incentives to actually see European countries fail, and I think that's a very bad incentive. The countries in Europe do have fiscal problems. No one denies the fact that the budget deficits have to be addressed and some expenses have to be cut. That's very clear. But why are we making the problem worse by creating bets that they won't be able to do it? It just seems like a very destructive form of finance.
You have said that you believe that the EU IMF package will fail. Why do you think so?
Because no matter how big you make the package, Wall Street can always create a larger amount of bets against it. And this is a very important point. When you trade in the bond market or the stock market, you have to have actual bonds or actual shares of companies, and you need actual money to do it. So you need some money, and there's a finite or limited amount of instruments that you can actually buy and sell. And that's the way markets have always operated. But with these derivative markets, there's no limit on the amount of positions you can create. You're not limited by the underlying. A derivative product will perform, it'll go up or down based on the underlying instrument, the underlying stock or bond. But you can have an unlimited quantity. So if Europe creates a $1 trillion rescue package, the big banks can create a $5 trillion bet against it. So no matter how big the rescue package is, the bet against it can always be bigger. That gives a massive incentive all over the world to see it fail. And so you're fighting a losing battle. The answer is to either regulate or ban these types of derivatives. And I think Angela Merkel in Germany has done a very good job of starting that. She did it alone. I thought she showed a lot of vision and a lot of courage. I would hope that the Greek government, the French government, the Italian government, other European governments would join with her, because until you ban these products, you're always going to be at the mercy of speculators and at the mercy of the market.
Well, Angela Merkel has banned this week. Other analysts and experts are saying that Germany has made quite a lot of money from this crisis in Greece.
Well, that's because the German banks own a lot of the Greek bonds, and so also Germany is an export powerhouse. So Germany's making money on the exports. They're also making money on the bonds. If the bonds were to default in some sense or had to be restructured, the German and the French banks would be among the biggest losers. But of course, the Greek people would be suffering the consequences of that as well. So I think the idea of some kind of solidarity in Europe, some kind of rescue package, is not a bad idea. It does buy time for the countries to take steps that probably do need to be taken. But my point is that the countries left to their own devices can solve this problem. Why are we allowing banks, investment banks and Wall Street investment banks to make massive bets against it? The investment banks did not cause the problem, but they're making it worse, and that's the point. The problem is what it is. The fiscal issues do have to be addressed. But why are we allowing massively large side bets that only make the problem worse?
Is Greece's crisis manageable?
It's manageable in its own terms. That is to say, the amount of the deficit in Greece, the amount of the bond market in Greece, of a size that with assistance from the rest of Europe and with contributions obviously from Greece itself, can be managed very well. Greece, by the way, has a secret weapon, which is it has over 100 tons of gold. My suggestion from the start is that Greece could issue bonds to a country like China, for example. They could issue, say, 20 billion euros of 7-year notes at maybe 4%, which is way below where Greece is borrowing today. And that would send a very positive signal to the markets, would cause a rally in Greek bonds and Greek stocks. It would be very beneficial because it would show that China is now investing heavily to help the Greek economy. Then in exchange for that, Greece could sell some quantity, not all by any means, but maybe 10 tons of gold to China, which is a very eager buyer of gold. And they could sell that at a price of, say, $1,050 equivalent per ounce, which is a very good price. So China would be buying Greek bonds at a favorable price to Greece, and then Greece could sell maybe 10 tons of gold at a favorable price to China. That would be a very positive trade for both countries. Would help rebalance world gold supplies. Would also cause a rally in Greek bonds. So I think that's the kind of creative solution that the Greek government could use to solve this problem. But meanwhile, while you're trying to do the right thing, you have banks over on the side betting against you in this credit default swap market. And you need to shut down that market so that you can have time to solve the problem in a sensible way.
Are the austerity measures that have been implemented in Greece so far on pensions and salaries a good solution, in your opinion? Will they help Greece get out of this crisis?
It'll help in the short run, but at the end of the day, it's going to cause austerity and probably a decline in the Greek economy. So how on earth are you going to solve your debt problem when the economy is in decline? So probably a better solution would be to lower taxes. That sounds counterintuitive. You say, gee, when you lower taxes, aren't you increasing the fiscal deficit? Well, in the short run, possibly yes, but you're also going to encourage new investment, encourage business, bring new foreign investment into Greece. The key thing is investment and savings. So if you can create a more favorable business climate by reducing regulation, cutting taxes, that would cause more investment to come into Greece. It would create jobs. It would actually create new income taxes, because when you have jobs, people are going to be paying taxes. So the tax cut could very largely pay for itself in the form of new jobs that have been created. So I think this is what the United States did in the 1980s. Unfortunately, we're not doing it today. Today we're doing the opposite, which is very bad for the U.S. economy. But in the 1980s, we cut taxes and cut regulation, and the economy did very well. So that's really a recommendation for Greece. So I do think Greece has some resources. They could use a certain amount of gold to help as a sweetener to help sell some bond issues in the short run, and they could cut taxes to create jobs in the long run, and I think Greece could find a way out of it. But meanwhile, I think the speculation on the side does no good at all and is very, very harmful.
Thank you for joining us, Mr. Rickards.
Thank you for inviting me.